Hello viewers, we'll be going over the S&P 500. In this video, we'll be going over the day-by-day probability model, percent comparison, how we find the models, and the day-by-day forecast for the S&P 500. So back to the technical analysis, today we're down 2.6% on the 1-hour chart. We are starting to approach negative MACD, and if we expand out to the 4-hour chart, we start to see a divergence on the 4-hour MACD, and at the moment we're resting on support, the 50 moving average on the 4-hour chart. And on the daily chart, right now we made a decent reversal in short term, and we see a convergence on the daily MACD. We're no longer oversold on the daily RSI, and at the moment we are encountering resistance on the 18-day moving average, this purple line at the moment. And that resistance is at $262. And if we do manage to break that resistance, the next resistance will be where we made a gap down between March 11th and March 12th. And that resistance is around $273. If we do manage to make higher highs above the 18-day moving average. And as support, we made a support on March 23rd around a price of $218, and that coincides with past resistance. And if we expand that further to multi-years, and that resistance was around, that dated back around to 2016, so let's try and find it. And that is, if we expand out a bit further, and we do see that resistance line back between August 2016 all the way to September 2016. So since we're above resistance, now that act as our support level, and that is where we left off in the current trend, and we did bounce right off it. So if we do manage to climb up higher, that price movement will be fairly around from where we are to resistance. That will be 7% up to the upside, and back to support level, that will be around 15% to the downside. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress, on the 7th day, we have a 50% chance for the S&P 500 to climb higher between 0 and 10%. On the extreme case, we have a 13% chance for the S&P 500 to climb between 10% and 20%. And to the downside, we have a 38% chance for the S&P 500 to fall lower between 0 and negative 10%. So let's examine where the S&P 500 will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to June 29th, 2001 to October 1st, 2001. So let me point out why these two charts are similar. So what we have here in the current trend, we start off at the bottom Bollinger Band, and then we proceeded to touch the upper Bollinger Band. And after touching the upper Bollinger Band, we average down lower to fall along the bottom Bollinger Band. And we see a slight reversion to the mean nearing the middle Bollinger Band. So we see those points there. And let's examine the trend in question. We start to see a similar pattern here as well. Start off at the bottom Bollinger Band. Next, we proceeded to touch the upper Bollinger Band. And afterwards, we average below the middle Bollinger Band and touching the bottom Bollinger Band in between as well. And then we see a reversion to the mean right towards the very end. So we have those points there, and what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend. So there's a reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was June 29, 2001 to October 1st, 2001. Back then, this S&P 500 was up around 3.7%. So we may see slightly to the upside in the next coming days. And if we examine the day-by-day probability model, it coincides with this standard deviation of 50% chance for the S&P 500 to climb between 0 and 10%. And if we examine further on the technical performance, so we have the current trend right here. We are down 33 basis points or 33% from monthly high, up around 12% from monthly low, up 4.8% from 10 simple moving average, down 4% from 20 simple moving average, and down 16% from 50 simple moving average. And the trend that we just examined, June 29, 2001 to October 1st, 2001, back then the S&P 500 was only down 19%, up 7.7% from monthly low, up 2.5% from 10 simple moving average, down 2.4% from 20 simple moving average, and down 9% from 50 simple moving average. So we do see a decrease, increase, increase, decrease, and decrease. Similar pattern to what we saw here in the current trend. And again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.